Hey everyone, this is JR from the MSA, Market Surveillance Alliance, and today I just want to let you know that inflation is not under control. I don't want anyone to get excited. Now, what's happening and what is not happening? So the first thing is that I'm going to share with you is what everyone has on their chart, right? They have the same lines and everything. So I'm going to share the same, but what exactly is this happening? Because before I used to have my target 4,200 points in the SP500. We got there. At the beginning it was a little bit cuckoo, not cuckoo anymore. And I will show you how things can change very fast for more upside. Now, the other thing I will talk about in this video will be someone, as usual, remember, someone always knows, the Twitter deal will take place. And Elon Musk, well, it looks like he will have to pay. So don't be surprised if this is going to happen. These ideas in general are just a continuation of my thesis in how the market actually works as a 6-month forward guidance of what is happening. So remember, although technically speaking, we're in a recession, there's a few indicators that we study at the Market Surveillance Alliance. We have weekly training videos for our members because you need to understand how to play the market correctly. And as always, what I like to do every Friday, that will be tomorrow, we always have spring cleaning. That's right, spring cleaning is every Friday, where we do not allow surprises to take place. We like to tame chaos. You want to make sure you're cleaning your portfolio, trimming positions. That's proper risk and money management guidance. All right, so let's jump into the charts. Let's take a look what's happening and let's go to TradingView. At the bottom, you will see all these sort of oscillators. This is the Hawkeye Trader Fat Boy. And yeah, our own in-house proprietary technology, we track a lot of what's happening at the institutional capital rotation. There's when you want to know exactly how big players like Goldman Sachs and God knows who else is there. They are rotating capital. But at the same time, you need to know where is the risk premium taking place. Now, when I look at the market as a whole, there is absolutely evidence that Fat Boy was at least 2 weeks in advance of the bottom. Now, in future videos, I will share with the public how powerful the Hawkeye Trader Fat Boy is and why I think everyone that is watching, everyone that is listening, or everyone that is reading the caption, right? You need to get these tools and you have to set yourself. It's like being an athlete, like Usain Bolt. If you can find something that will give you that 3% edge, you do it, all right? So now, let's take a look. So the bottom was set from the cross here. You have two weeks in advance. It was calling the bottom, and now we have these. These are the lines, this one and this other one. These are the lines that everyone has on their charts, and it makes sense. The first thing you have to understand is when you look from the perspective of the 200 exponential moving average, just as a guidance, right? As a guidance of the trend, we were right there, and that would be bad. If we go and trade under 3,630 points, it's going to be really bad. Now, the upside already is limited. We'll have something close to another probably 120 points to the upside. That shouldn't surprise anyone, okay? But after that, look for retracement. You're looking for pullbacks. Now, as the market goes up, and as we move up, what happens is that your risk reward changes. So I want everyone to be aware that your risk reward is not anymore something that looks very attractive. Now, calls are more expensive as more and more folks are buying. So puts become cheaper. So protection will be the way to go. But I don't think we're there yet. If we're very close to 4,300 points, then I will be looking for put protection until the trend indicates that we are turning bearish. So far, there's no evidence that we need to short the market. So we trend Fibonacci. Now, this is where I want you to play. I want you to play right here, right there, right there, okay? Okay, so right there. I want you to look at all these levels. The 38.2% and the 61.8%, these are the key levels that I want you to pay attention. Now, there's some intermediary level, the 29.50% of Fibonacci level. That's the American style, okay? And New York traders, and if you're from New York, let me know. But what we think in the US is that sometimes trends are so intense. There's so much bid in the trend, in the upside trend, that you don't need a deep pullback. Always remember that you don't need a deep pullback. So I will be looking to add positions back if we actually make it all the way back to 4,064. Shouldn't be a surprise to anyone. And that will be a great level for a continuation all the way. I would say if the market continues to surprise us, we might see before end of the year 4,630 points. That's the S&P. Remember, as we get closer to 4,300 points, be prepared for a pullback. It wouldn't be a bad thing. For it to go higher, we need people to be part of that trend, and that they do that on pullbacks. Yeah, now the pullbacks don't have to be so deep. And the other thing that can push these markets way higher is the traditional all good FOMO, fear of missing out. And there's a lot of managers that have a lot of cash. There's some charts indicating that as much cash as the great financial crisis. So that gives you an idea what's happening out there. So if you think this cannot continue, well, think twice. Now, that's what I have for you. Look for pullbacks. Risk reward is not in your favor. We do have some positions that we're looking to trim all the way to 4,300 points in our group, in our live group, where we are just every day look to grind and look to find positions. It's way different in the way we do it for our portfolio. So it's kind of, we're running two services at the same time. And basically, that's the advantage of being part of our community. Now, just to finish this video for today, like I said, inflation is not over. So just remember that it's good. And so many videos explaining how the CPI figure came a little bit lower, but everything came down to the side of oil, energy. So that's very important to keep in mind. Now, let's go to Twitter. Elon Musk. So he sold shares. People kind of noticed, they fell with him selling, and that's fine. He was putting the money together. Now, looking at technical levels for this video, we are actually breaking above the 200 exponential weekly. Yeah, this is in the weekly chart, 200 exponential moving average. That's very good. So it's not a big deal that we just move all the way up to this level back in April and we go back to 55. Now, the key when you're trading options is to understanding, okay, how do I execute? Execution is the key to success. So someone, and you can look for the volume here. We have a massive volume yesterday in this contract. This is the 2023 June 16 55 call. And yesterday, someone picked close to 9,981 contracts. How do I know this? I know this because there's multiple software and some proprietary technology that we use to identify that this actually was one trader. I don't know if it's a she or he, if it's a they, if it's a cat, or if it's a parrot. I don't know. But what I do know, that they leave a trail, and that's what we want to track. Just so you know, that was close to $399. Yes, $400,000. Now, why do I like this trade? I like this trade because it makes perfect sense. When you look at trade like this, where you're understanding, and just to kind of finish the video for today, you have to understand the execution. Following what they do, the high rollers in Wall Street do, it's not only understanding, okay, they're doing this, but why he's speaking, why she's speaking the contract in June. Because it's $400,000. That's it's a lot of money. So you're not exposing yourself to the short-term play that roller retail traders do. You have to think, and you have to reduce your risk by buying time. Time becomes an asset. In trading, the more time you have, the more things you can endure going to your goal. And that's what you want to do, okay? So if I have $400,000 and I think this deal is going to happen because it looks like it will happen, then I'm not just going to buy a weekly. No, I buy time. That's the key to success, right? So keep in mind, this contract is where you want to be. Right now, contract is selling for 33 cents. Not a big deal. So absolutely, I encourage you to look at the trade. If you take the trade, remember that it's your responsibility and it's for yours to manage the risk. Absolutely, I'm going to take the trade. I'm going to drop probably $2,000 into this one, but that's my financial circumstances allow me to go with this. If you don't have that much, if you're starting with $1,000, take $100 maybe. But remember, this is not personal advice. It's just a little bit of guidance. Hey guys, this is all I have for you today. So I will look to come tomorrow Fridays for a quick overview of a few companies, where the market is and where you can actually take a little bit of risk. But remember, as we moved up, you might be expecting a pullback for better entries and for better risk reward ratios. Guys, again, thank you so much. And please never forget that at the end of the day, someone always, that's right, knows.